Hey guys, welcome back to the channel. So today I just got finished eating some Portillo's, so I'm decided to look at the stock as well as talk about some of the things that have happened in the stock market, including Moody's downgrading the U.S. credit rating and what that could mean for the economy as well as for stocks, as well as some of the recent developments around Donald Trump threatening tariffs on Apple stock and the European Union. So let's dive in. So the S&P 500 ended the week down. We're at a level of 5,802, and a lot of this was due to the fact that Donald Trump wants to put tariffs on the European Union, and he wants Apple to pay tariffs on iPhones that are not made in the U.S. So, I recently went to Portillo's and had me a burger and a beef, and me being from the Chicago area and all, I had to get me some. So really, really delicious. I'm still a little bloated from that, but what's not bloated is the stock price for Portillo's. The Portillo's stock has been absolutely dog garbage since it became public a few years ago. We can look at the year-to-date chart. The stock is slightly up for the year. I mean, they're up by like $2, but that's trash if we compare it to the S&P 500. Correction, the even Portillo stock has done better than the United States stock market right now. As you can see, I put the purple line is the S&P 500. Portillo stock is the blue, and you see that the Portillo's is up 22% for the year. It's only like $2, and the S&P 500 is down by 1%. So, who would have thought you would have made more money putting your money in Portillo stock than putting it in the S&P 500? Of course, that's not going to hold over long periods of time. Portillo stock became public in 2022 at a price of around $37. They shot up to about $47. And ever since then, they've been on a decline, as you can see over the last 5 years. When we compare it to the S&P 500 over the last 5 years, you can clearly see the difference there. The purple line is the S&P 500. It's gained over 26%, and Portillo stock is down 69% over the last 5 years. Absolute trash. But anyways, let's stop talking about Portillo stock for a little bit. Let's go to the actual stock market. How's the stock market doing these days? About 2 weeks ago, we had an announcement that Moody's, the credit rating agency, downgraded the U.S. So they went from like a AAA, the highest rating you can get, to like a capital A, double A, -1. Like they lost like 1 point, and it's a pretty big deal because when you think of like me and you, we get credit ratings too, right? So from like Transperian, Equifax, and TransUnion, they give us a credit score, and that determines how likely we are to pay back our debts, right? So when you go to a bank, they look at your credit score and they see, well, yeah, I'm going to lend you money, or no, I'm not going to lend you money because you have a bad credit score. Well, it's the same thing with the United States, other countries, and corporations. They also get credit ratings too for when they have to issue bonds. So a bond is them issuing debt and borrowing money. The United States borrows money from us in order to finance its operations. So Moody's downgraded the U.S. about a week ago, and the market didn't really make a fuss out of it. You would think this was a pretty big deal because there's been a lot of talk about the U.S. defaulting on its debt. We have too much debt. The debt ceiling can't get raised because politicians keep arguing about it. It's just been a thing for a long time. But this isn't the first time the U.S. has been downgraded. I told you there's 3 credit rating agencies. There's Moody's, which downgraded the U.S. A week or two ago. We got Fitch, and we got S&P. Well, S&P, in 2011, they downgraded the U.S. first. And that one was kind of a big deal. The market did fall after that. But it did take about 12 years until 2023 when Fitch, the second rating agency, also downgraded the U.S. by 1 notch. At the same time, around that same time, Moody's issued a warning saying, hey, if things keep going the way they are, we're also going to downgrade the U.S. So they finally did it about a week or two ago, but the market seemed like it didn't really care. Having come off of the lows of the tariff terror that occurred in early April, the market rebounded really nice after that. And I thought when Moody's downgraded them, I'm like, wow, this is going to bring the market back down 5 or 10% because this is a big deal. But as you can see on the chart here, it hardly did a dent in the stock market. The only thing that actually happened was that Donald Trump said that he would tariff the European Union more, and he wants Apple to pay tariffs on phones that aren't made in the U.S. So that actually caused the market to go down a little bit, about 1%. So, but I always encourage investors, especially if you're a long-term investor. Let's say you have a 10, 15, 30-year time horizon ahead of you. Just stay in it. Don't try to get out right now and time these short, volatile market swings. If you think about the things that are happening this day and age with the tariffs and possible recession. These are short-term events that we'll get through on the other side, and you'll be a lot better for it. In another video, I can talk about some of the more long-term events that we've gone through, and yet the market has kept going higher from it. So if you found any kind of value in this video, or if you have some questions that are on your mind, shoot me the questions in the comments. I'll make a video answering the questions. And no question is too dumb or anything like that. So let me know what you guys want to see, and we will see you in the next one. You guys have a great one. Take care.